Can hear you
Yeah,
now, Anthony. How are you?
I'm doing well. How are you?
Great to have you back, Anthony. So, for people that are familiar with you, I turn the volume up when you're on CNBC because
Oh,
I'm
thank
very
you very
interested.
much.
I'm always interested in your views. So, yeah, I know that NYMEX commodity markets are your bailiwick. So, we had that
Right.
nice sell-off in crude from 55 and a half, buddy, and it pulled back. Looks like you have had a moving average there, and we're starting to advance again. Are you looking for new highs over 55 and a half?
I am
And is that
actually. In
okay?
reading reading the news lately, I've seemed to be one of the only ones that am expecting that. But there's a couple things that tell me. Number one, the technicals. Can you see this chart on my screen?
Yeah, it held. What's that
Okay, yeah,
red moving average? What period is
that's
that?
the 50 day, and the blue is the 21
Okay.
day. So a few sessions ago, 1, 2, 3, 4, 5, 6, 7, 8, we had the 21 day cross above the 50. So that's actually a bullish indicator right there. And then you have all these bottoms right here and around the 51, 50, 50, 50 level. If you see
Right.
right here, 50, 80 low, 50, 50, 93 low, 51.55, and it continues here. So it's building its base right here. And then I have to think about the fundamentals of the market, Dale and guess. And there's a lot of talk about
What are they?
U.S. production and a lot of crude out there. But what I am seeing, and that is true, all of that is true. But what I am seeing is OPEC is actually sticking to cuts right now, and Saudi Arabia is producing less. They're exporting less right now. The Russians the same way. There's obviously, we all know about the problems in Venezuela as far as their oil supplies go. And the market, well, it might not show it right now. It should start to tighten up a little bit. And we're getting
Okay.
now, go ahead.
No, go ahead. Go ahead.
I was going to say now
All
that
right.
refineries are actually coming out of their maintenance season, which means that they're going to start gearing up for summer gasoline, which also means they're going to start using a lot more crude. So, the last few weeks we've seen builds in supply, the numbers that are released on Tuesday night and Wednesday morning. I would expect to see some draws in supply coming up pretty soon.
Okay, so I wanted to ask you about these fundamentals. I heard some chatter. There was some type of deal struck between Saudi Arabia and Russia. Could you tell us a little bit about that, if you're aware of it?
Well, from what I'm hearing, Dale, it's funny because when they say deal, it's hard to say, see it until we actually see the numbers coming out.
Okay.
And, I actually follow a great program, and I'm not trying to sell it to anybody or anything, but there's a company out there called Tanker Trackers, and
Okay.
Tanker Trackers was the first one, if you remember, when the sanctions were imposed in Iran. They were the first ones to say, "Hey, wait a minute, Iranian oil is still shipping here," and this is when we were trading in the 70s. And, when the world kind of realized that Iranian oil was still shipping, that was when the sell-off kind of started. But as far as the Russians and OPEC goes, their deal is to start cutting production and keep it in the levels that they made back in 2016 and possibly lower than that, in an effort, obviously, to boost prices. Now, as I said, it all depends upon the numbers. It looks like so far the Saudis and the rest of OPEC are kind of keeping to their deal at this point. I haven't really seen the numbers coming out of Russia, but in a couple days I will, and I'll put those out there on Twitter when I get them. But for right now, it does look like there is some effort at least to curtail supply here.
Okay. Let me ask you about, you brought up Venezuela. There's a lot of hawks in the current administration for Iran, with Iran too. Is it possible that there's some type of adventurism that could take place in Venezuela? It's a much softer target than Iran. So do you think
it certainly is, but I think that one thing Trump is kind of showing is he doesn't really want conflict, and I think that's shown by his actions in Syria and also in
True.
in Afghanistan
Good
by
point.
pulling troops out. So I'm thinking that he's going to err more on the side of let's try to economic sanctions, put pressure, world pressure on Maduro, and then see what happens there. The problem with Venezuela, and it's kind of a big problem here, is that that's a heavy crude that they produce, and that's actually what the refiners are kind of geared up for in this country. A lot of the refiners they refine that heavy crude oil, and the problem with Venezuela is cutting that crude off is that it cuts off some crude to our refiners also. Now, Canadian crude is heavy also, so that could make up some of the difference, but the problem there is the pipelines and the shipping. These pipelines are kind of full right now.
Okay.
So there could be a little bit of a squeeze there, and that's really, more the products than it is actual crude oil. So gasoline supplies are very well going into the season. They're near record highs, but that could change if we get a demand pickup and refiners aren't able to refine as much crude oil into gasoline as they want, that heavy crude.
Okay, so S&Ps are up almost 20 handles today, and crude's up $1.55. What do you make out of this correlation? Seems like they're Siamese twins.
That's a good point, Dale. That's a very good point. And also, let's look at the dollar, too. The dollar's a little bit weaker today. It bumped up against that 97 handle and failed there. So that's actually supporting it, too. But that's a very good point. I think, Dale, I've been saying it on futures now also, that if we happen to get a trade deal with China over the next couple of weeks, then crude oil, that'll be another boost for crude oil because, the perception is demand will pick up off of a trade deal. But yeah, absolutely. They're going in tandem right now. And I think that that's just a reflection of a positive, feeling about the economy. Maybe Congress can come together and get things done.
Okay, well, that's interesting. The Chinese have had this cash and carry market for energy priced in yuan for a while. But I interviewed Shy Girl. I don't know if you know her. She said there's no back month action, so it can't really grow. Yeah, so there's no potential for hedgers to come in and use that market. So is it a failed experiment just to de-dollarize oil and take away some of the petrodollar strength, or what?
I don't know. I think it might be too early to call it a failed experiment because I think they've only been up and running for about a year right now. But certainly you would want to see some of those back months kind of get some volume in it because right now it's just basically a speculator's market at this point. And, when you see all that volume in the front, that's what it's telling you. I don't know if it's going to supplant, WTI or Brent and everything else and the U.S. dollar. Certainly there could be an impact, but I just don't see it right now.
Okay. So you brought up the dollar, and also I know in your bailiwick are the precious metals, having been a trader in New York for many years. You have any view on what's been happening with gold and silver, silver ratio?
Yeah,
go ahead, buddy.
I did I liked gold a lot coming into the last few months now. We've kind of failed at that 1325 level. Let me pull up a chart here of gold, a daily chart. We'll see where we are. Here we go, right here. Let me add the 21-day, the moving averages on this. Yeah, I mean, this chart actually looks good. To me, it looks kind of like almost like it did in this area right here.
Right.
Where
just
the market kind of rallies, takes a pause, then rallies again. And I wouldn't be surprised if it didn't do this again. It's funny because gold actually, obviously we failed when the dollar kind of failed up above, below around that 95. I expected that dollar to really bust through that 95 handle, and it never did.
Yeah.
Once it started to rally, gold started to fail. But I still believe in it. 1300 is my support.
Right.
These two bottoms right here, a bunch of tops right there tell me that. So I think that, investors are kind of looking for, I think, a more balanced portfolio, let's say. So I think that they're adding a little bit more gold here. The other thing, Dale, and, you guys, if you can just bear me with me 1 second, because of the government shutdown, we weren't getting the updates on the commitment of traders report.
Yeah, we weren't getting a lot of data. Yeah, go ahead.
Exactly. And what I did see as far as the metals were, up until December 18th, and let me see if they've finally, can you see this screen right here?
Yeah, got it. Got
okay.
it.
Yeah, let me see if this has been updated. Because the trend was up until December 18th, was that hedge funds were buying gold again.
Okay.
So let's see what they're doing right here. Manage money. Okay, yes, it has been updated. Here we go. I'm going to make the screen bigger. Okay, as you see, this is what I'm talking about. The 18th, the blue line is the longs, the orange line is the shorts, and the green line is the spread trading. And as you could say, that they started to build this position a little bit higher, a lot more longs than shorts. Looks like they took some off the board over the last week or so, and that's probably the move that the dollar made. And they've increased the shorts, but certainly the longs much more above it, 80,000 or 112,000 longs versus 80,000 shorts at this point. So, and if you look back here, this is when
huge shorts.
Yeah, huge amount of shorts.
So that fuel is gone. The short covering fuel is gone. The short
covering fuel is definitely gone. Absolutely. And this is all right. You're seeing right here, Dale. Absolutely. Is all the short covering rally. And this is adding now to longs. Now, like I said, they took a little bit of a pause here. I'd like to see tomorrow when this is updated whether or not that continues.
Okay, you know what I'm interested in? That a lot of people don't understand, Anthony, and a lot of people have different explanations. How do you explain, gold's move over the last several months has happened, the rally has happened in the face of a stronger dollar. How do you explain the dollar going up and gold going up at the same time?
Well, I mean, Dale, let's look at the chart right here. This dollar, this is back on, let's see, December 14th, the dollar reached that high of 97 something at that point. And then you go back to gold right here. And yeah, you're right. I mean, it's a very strange thing, but I think, let's look at what was happening in the economy at that time. That was the December sell-off. If you remember the 25th, Christmas Eve, the market really took a big hit, but the whole month long, it was taking hits. And I think that was part of it, where investors said, hey, wait a minute, let's look for a little bit of protection here and maybe buy some gold.
Okay. So, I've been taught that gold, when the dollar's strong, is obviously, while other currencies are weaker, is rallying in other currency terms. The fact that it's begun to rally in the dollar is an even more bullish sign, because now it's rallying against all currencies. So, that's definitely a sign of a bull market. Also, with gold rallying, it seems like we have kind of like all one market, crude up, gold up, market up. Have you noticed that it's kind of like all the markets are kind of like a balloon, where, when there's thoughts of easy money, everything goes up, and when there's, when there was talk of, a tighter money, everything goes down. Have you ever seen an environment like this before, where everything kind of just a matter of degrees of how much higher something, or relative strength or weakness, how much something goes up compared to other instruments?
It's funny, Dale, because I said that there's a lot of investors or money managers out there that are in their early 30s, and they've known no other market than the Fed, kind of massaging things along. And, when Jay Powell kind of did his pivot last month, about curtailing interest rate hikes and things like that, and looking at the data and everything else, I mean, that just gave everybody the green light. And from almost that day on, you saw kind of commodities lift their head up, and equities lift their head up. So, yeah, I mean, it's a bubbles.
We're either reflating or deflating everything. There's no differentiation.
I probably think it's a reflation of things right now. And bubbles are obviously they're ugly when they decide to finally burst. I think this kind of you're trying to see a massaging of the market through the troubled times. And the troubled times, I mean the trade deal, Brexit,
Right.
things like that. But I truly believe that the underlying fundamentals are pretty good right now. Earnings have been pretty good. That if we do get a trade deal and they do get a Brexit deal, it's going to be justified that these markets are higher right now because a trade deal means more demand for commodities. And,
Okay.
and also for, the equities market is better because obviously half the S&P countries export or companies export. So,
Okay.
and the same thing with Brexit.
Okay, so let's talk about demand coming back. There were a lot of copper bears out there for a while, and copper's turned around. Bear market rally, or is there more to this recent pop in copper? Anthony,
Well,
what's your view?
I think it's popped on optimism, but I think we're going to need a little bit more. I do have that chart here too. Let's pull
I
that
figured
one
you
up.
were following Dr. Copper that has a PhD in economics.
I follow all the commodities. So you see right here, Dale, this is
Yeah.
the spot right here, 285.
285. Yeah.
Yeah, you see this? Okay, we got these two highs going back November 20th, 284.60. And then we've got here December 3rd, 284.70. These highs right here where it failed, that's the spot right there. So I think that, yes, we could trade probably pretty much in this kind of range right here from 73 to 85. But I think that for this to really to pop above that, you're going to need you're going to need a deal and a deal that we can look at and read about and say, okay, this is it.
Yeah.
And then you're going to see copper really pop.
Okay, because I say copper's about construction and gold's about destruction. So, they both have different stories. Copper much more economically sensitive, gold being more of a hedge. Anything else on your radar? Anything else on your radar, bro? That
natural gas. Let's look at take a look at natural gas.
I'm glad you brought it up. Okay.
Yeah, that one is just really, look at these moves right here. This is our high back in November. This was that early cold we had to the season. And we came in, at this point, about 20% less in supplies than last year at this time. And This was when we got that first blast of cold weather. This is what popped it. But then, you know what happened? It actually got a little milder. And the winter hasn't been as bad. So this is the sell-off. Production has been amazingly good right now. But if you look back here on the bottom of these charts right here, I'm going to eliminate this line because this is not good. But right here.
You ever seen natty gas this volatile before? We've had cold winters
before.
I
did years ago. Years ago, It actually traded up to $12 at one point.
Okay. All right, and so, that was a weather shock too?
Absolutely. It was completely a weather shock.
So if you believe in if you don't believe in global warming and you believe in global cooling, I've had some guys on that are talking about, what's happening with the sun and that we're entering a cooling period. There's probably some very good long-term opportunities with the sell-off in that gas. I've actually seen some counts that could take it to the mid-20s in the next couple of years. What do you think of that?
Wow, that would be amazing. $20 would be just incredible. All I can look at is the next 6 months to a year. That's what I kind of follow. But, right now we're at the bottom end here of kind of where we've been. So if we get down to that 255, 260 level, you see going way back here, support. That's from March. I would almost take a shot and buy it here because it should hold.
Okay.
But production along with crude oil now, they've been fantastic. Usually when you go search for crude oil, you'll find natural gas at the same time.
Okay, so the frackers, do they ever go out and just look for nat gas, or is it always crude first and
No, they'll look for nat gas too, especially when you're talking areas like the Marcellus Shale and things like that. But when you're just strictly looking for crude oil, most of the time you're going to find natural gas along with it. And production in this country is just really for natural gas is just amazingly strong. I would think what would really pick up the market, Dale, because our prices are a lot cheaper than they are in Europe.
Yeah, they are. Now. It's what, to be able to export overseas?
Exactly. There's a plant that's up right now, and there's another 2 that are coming online. And once we can get those online and really, export this, liquefy it, and then export it, you're going to probably see prices rise, or you'll see actually that spread come in between European natural gas and U.S. natural gas.
Yeah, so that'll be great for the consumer. Just like the tax.
Right, exactly.
Huh? Yeah. That'll be great for the middle class trying to heat their homes in the winter.
I'm sure everybody felt it when they got that December bill.
Yeah. Well, Anthony, God, what a pleasure just talking to you about the markets. What's the best way besides Twitter for people to follow you, or is that the best way for people to do it?
Yeah, the best way is Twitter. If anybody has any kind of a question whatsoever, they could direct message me on Twitter. I leave that open, or just throw me an email at drz90AOL. I'm old school email. Oh,
I have an AOL too. People make fun of me.
I know they do to me too.
You too, buddy? All right, Anthony.
Oh, yeah.
Well, Happy New Year, belated, buddy, and my trading warrior brother. Good hunting. Appreciate you taking some time out of your day to share your views. Thank you for edifying F.A.C.E today, buddy.
Yeah, and I'm on. The Futures Now is on later on this afternoon. 12:30 leads to our 1 o'clock online show, and I'm sure we're going to cover energy later.
Okay, there's a nice segue to catch Anthony later on CNBC, and definitely click your mute button, turn the volume on to hear what Anthony has to say at all times. This guy has a feel for the markets, and we're like the dinosaurs of the trading business, Anthony, and you can't learn experience. You can't learn it. It only happens with the passing of time, and you and I have done the time outside of prison walls, anyway, right?
Yeah.
All right, buddy. Thank you, Anthony.
Yep. Have a great day.
Thank you, Anthony Grisanti. And you could follow him at Anthony Grizz. That's Turnaround Tuesday, everybody. Have a great day. And I'll see everyone tomorrow. Thanks again, Anthony. And remember, don't just count your pips, count your blessings. At Anthony Grizz, Michael Beatty. And thank you, Anthony. And I'll see everyone tomorrow. Adios.
All right. Bye-bye.
Bye-bye.